Hello everyone, today is Friday, October 29th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If you have never caught one of these videos, welcome. It's nice to have you here. Here's how they work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We go beyond price action itself, and we look at things like correlations and credit markets and market internals, pick apart everything that stands out, looks different or interesting. And then in part two, we jump into the charts. We look at those longer term trends and make sense of where markets are rotating and where we might be headed. So hopefully that sounds good to you. Let's jump into some of the takeaways, some of the headlines from this week. Front story, of course, is more stock market all-time highs. This started last week. We saw this nice rally back up after a 6% give or take pullback in the markets throughout September, and we are now back at those all-time highs. We're in the middle of earnings season, and earnings season in aggregate has been pretty good. There's obviously some notable stories, even in the big tech names. We saw supply constraints, supply chain constraints, and some other things that were dragging some companies down. But generally speaking, I think we've got over half of companies reported, and I believe last I saw from Bloomberg's numbers, it was 30% plus year over year earnings growth. And so market seems pretty happy with that. Generally speaking, we're at highs, of course, and that's sort of how things have been digesting. We also have the US dollar that is starting to wake back up. Remember, we were tracking this closely. We talked about and highlighted all of the tightly inverse correlation to the dollar and to a lot of things that were happening out there in terms of equity markets and commodities. And the dollar gave us a nice pullback over the past week and a half or so, but now it's starting to wake back up. So we'll talk about that a little bit later as well. So let's jump into the numbers here. If we look at the right-hand side, you can see it was positive across the week here for the U.S. markets. We saw the Dow Jones and the Russell were a little bit lagging behind, still positive, but up about 0.25% to 0.4%. And we see the Nasdaq up 3.23%. So certainly getting the spotlight here this week. Also take a look now at the 1 month numbers for the Nasdaq. It is the leader over the past 1 month of trading. Remember that the Nasdaq was the laggard. It had pulled back the most. It was stagnant the most. And now it is quickly returning back to its leadership role. If we take a look at world stocks here minus the US, it was a negative week for world stocks, down minus 0.7%. If we take a look at market internals, we continue to see pretty constructive action here. So this is, again, something we highlighted, we enforced or reinforced last week was, my excitement in just seeing these numbers get back up into triple digit days here for the NYSE 52-week highs minus lows. That is a nice metric I like to track. It's clean, it's simple, it tells a powerful story over the medium term for markets. And we did see things taper off a bit here Wednesday, Thursday, Friday, back up to the upper double digits, but still 578 net stocks advancing on the week minus those that were hitting new 52-week lows. So that is constructive in my eyes. The cumulative AD line here was a little bit weaker than maybe I'd prefer to see, but still, again, positive and hanging in there. Percentage of stocks over 20 SMA, about 63% at this time. So here is that view of 52-week highs minus lows. Again, you're looking for a nice uptrend in this chart, and that's exactly what you have right here. It's picture perfect. That momentum is pushing to the upside here. Again, I like this. I like the undertones to the market here as we go into a seasonally strong period. And now as we rotate into November, this also marks the last trading session of October. So October in the books, starting November. This is where, we get holiday time. Maybe people are a little bit happier and, generous in maybe they're investing, but it's really probably a lot of other things like performance chasing and kind of all the other incentives and market flow structures that really make November maybe a better performing month than average. But here we are, good underpinnings to the market and going into a seasonally bullish time. If we take a look at sector performance on the week here, you can see it was pretty split. So we had a pretty even run here of stocks working higher on the week and those falling. We had consumer discretionary was just out in front, 4.33%, big move for that index. We saw tech in the second spot and healthcare in the third spot. If we look on the downside here, it was that sort of inflation trade, maybe more value cyclical, financials, energy, utilities down here on the underperformer list, anywhere from 0.5% down to 0.9%. If we take a look at correlations, I didn't really see too much here that stood out to me. Seems like a bunch of noise for the past 10 trading sessions. You've got some things you can maybe highlight, but feel free to take a look at this yourself. I compile all this data in a handful of different arrays, and we essentially compute the correlations over the past 2 weeks worth of trading. So feel free to use this and see if you find anything interesting there. Leave a comment if you do. On terms of volatility, so volatility here was once again kind of hanging down here around 16, which is a great spot for the market. It's kind of the sweet spot. Love to see the VIX around 16 with a market that's at highs. That tells me it's kind of climbing the walls of worry a little bit, and that gives us clearance a lot of times to just continue to coast. So VIX still hanging out here around 16, term structure, a little bit steep front to 3 month, but this is basically the world we've been living in now for really all of this year in terms of that steepness. Now, if we look at interest rates and credit, you can see that yields were down, generally speaking, across the board here, and our investment grade, our credit markets here, so LQD, JNK seeing, well, at least LQD seeing a nice move higher this week. So everything seems to be pretty happy, contained, and in line here in terms of interest rates. Now, if we take a look at dollar and commodities, we see that we've got the dollar again back to rallying this week. It started off, I believe, on the downside, and it ended up having a pretty good move to the upside by the end of the week. So that has been playing a role. Again, we didn't quite see it in this week's correlation charts. We saw that correlation between the dollar and some of these other markets here start to break down or weaken up a little bit. But really, for the past month or so, we've seen the dollar keep a pretty close hold on its movement versus everything else. So we'll keep an eye on this. Gold was down a bit, silver was down, Bitcoin up, ag was up. Crude oil down about 1.5%, and natural gas up slightly. So really not a huge amount of movement here in terms of this set of assets. If we look at the report card, so we take it all into consideration here, we got check marks across the board. We got a solid A in terms of this week's market performance. Again, this doesn't speak to the short term. We can talk about the fact that the market is still pretty bid here and things are stretched in some areas. We'll talk about that a little bit more in part 2, but generally speaking, it's a good, healthy environment that we see shaping up here into year end. Now, if we take a look at the trading systems that we follow here at the Trade Risk, you can see that we've got, well, certainly 2 different views here across both of these systems. Our longer term system up top, as it's been basically all year, is still invested in this market. It's still riding uptrends in growth stocks, tech, and a bunch of other sectors. That has been doing well, and it had a great week this week, although it did get it did have suffer some of that pullback earlier in the week and then finished strong. And on the lower system here, our short-term system is certainly watching the move that we've seen here over the past, call it 10 days or so. And we've covered a lot of ground to the upside. And so it's not so comfortable kind of jumping in right now. It's feeling out how this market's going to shake out next week. So you can see it is in a rare positioning of nothing on, which does not happen very often. But here we are, 0 positions. I do believe we got some orders that we'll be filling in on Monday, but that's the way we're positioned. If you want to learn more, if you need some other trading systems to follow or for some guidance or to kind of diversify from what you're doing, check out the trading systems we have on our website, link appearing in the top right. And we'll be back here in just a moment with part 2. All right, we are back here with part two. We've got our equity market grid showing. We've got our custom smart trend filter indicator on all of these charts. So those are the multicolored dots you see. And then on each of these charts, you can see, of course, the white dashed lines, and that is price itself. Now we're looking at a weekly time frame here, and we've got some notable developments this week. So let's start in the top left here with the S&P 500. You can see that we've been in a period of transition, or at least a period that which we were kind of waiting to see which way this would end up tipping here, and price pretty much stayed on the upper side of our smart trend filter, and we always do give the benefit of the doubt to that prior trend. So it was a glass sort of half full mentality view, which is what we were keeping. But now, after this week's performance and new highs, we've got a confirmation here. We've got a green bullish buy signal fresh on the weekly time frame, so that is good. Bulls indicated here to be back in control. Same thing with the Nasdaq 100. So you can see after 4 weeks of little bit of a check back here, a pullback into this line, this area, you can see that we are back to now printing fresh new buy signals here on the weekly for the Nasdaq. And a big drum roll, please, on the Russell 2000 after, I don't even know how many. Let's see, we can just look quickly here. A little over 4 months we have been in the transition phase. And then take a look at this. We are getting a buy signal printed here in the Russell 2000. Now, if you were to throw traditional sort of channels on this, you would note, if you're looking at a candlestick chart or a bar chart right now, we haven't quite broke out just yet. We're still in that range. So this signal is coming a little bit early, and we'll see if that pays off. We'll see if this is going to sort of front run a true price breakout in the coming weeks. It would be nice to see. Do have some positions there. We've been talking about those. Talk about the IWM a little bit later as well. And then we have international stocks here printing a buy signal as well. This is a rare little whipsaw moment here. This is one thing our indicator does very well at traditionally, is it avoids these little sell signals that end up kind of converting over, but it does happen. And so now we see the ACWX international stocks back over this smart trend filter with a fresh buy signal. So that is the weekly time frame. That's the longer term outlook. Let's go to the daily chart here, and you can see, as you might imagine, it was a strong week. So we've got also a trend alignment here in the short term. Every market is still in a buy signal. This was pretty much what we had last week, so I'm not going to really go through each chart again. You can essentially see here that we've now been on a buy signal in the S&P 500 since the 15th of October. So that was pretty much where the early entry signal started from. And now, of course, like we said, you've got the multiple trend alignment there on the upside. So let's get a little bit tighter around price action. Everybody likes to look at the old candlestick analysis here, and you can see this is the same viewpoint. This is the same roadmap, if you will, that we talked about last week. And so our analysis last week was pretty much the same. We saw breadth picking up to the upside. We saw volatility coming out of the market. We saw good initial earnings reactions. So we were excited about the markets, broadly speaking, thinking that, bulls are back in control. But we did recognize, of course, just like we have now, that things are a little bit frothy. Maybe things have gotten a little bit extended in some areas. And so you might recall, we sort of drew this little ideal roadmap that we would have liked to see happen. Is the S&P kind of come back down here, find support at this area, bounce around a little bit, and then take off again. That was our, bullish roadmap here. And of course, you can see it did not do that whatsoever. It essentially just grinded higher all week long. It, of course, did reverse a bit on Tuesday, and then it sold off on Wednesday. But here we are again, Thursday and Friday, right back to new highs. I think the interesting thing here is, we had Apple, we had Amazon, we had some earnings late in the week that were maybe slightly disappointing off of the initial numbers and the initial market reaction. And you can see where we opened up in the S&P 500 here. We opened up at yesterday's bottom end of the range. We gapped down about 0.5, 0.6% to start the session, and all that happened was buyers stepped up. and we saw essentially just rotation back into stocks, and we saw no meaningful follow through even to what might have been an initially perceived negative earnings announcement for some of the biggest companies in the market. So that, I think, speaks to just the overall dynamics here. The market is digesting, you could call it bad, even the individual bad reports, and it's still just shrugging it off, and we're moving higher here. So those are always little micro clues to take a look at. Of course, doesn't mean we can't come in next week and see some more turbulence, but it's obviously a good little piece of data there on how the market responded. So when I look here at the S&P 500, I think we can very cleanly now sort of draw another easy, simple horizontal level right around the all-time highs here from September. And then you can see, of course, this is where the market sold off on Wednesday. So for me, upper level line in the sand here that I like to use now is right around 45.50, let's call it, in the S&P 500. That's where I'd like to see us stay above to keep the maximum momentum in this market, to keep the gravy train running to the upside. That's what I think I want to see bulls hang on to here. Let's throw in some Bollinger Bands. You can see they're still, that's the wrong market. You can see Bollinger Bands here still expanding to the upside, and you got price kind of riding underneath it. This is where markets can do a lot of damage to the upside, and they can just grind higher. And these are sort of, the acceleration to these markup periods. So that is really what I'm looking at there in the S&P 500. It's bullish trends all around, lots to like. There's some froth for sure. And so seeing some sideways or a little bit of fill back down in this zone here would be perfectly reasonable, and I would look at as opportunity at this point to position into this market. Now, if we take a look at the Russell 2000, here it is. You can see that things are still looking kind of the same like they've been here for basically all of this year. We did talk about the early buy signal there on our smart trend filter model. I've been entering this market. We talked about it, or I talked about it, disclosed sort of the buys that I've been putting on here in the Russell 2000. I can't remember the first time. I think I put a position on here, and then I added to it somewhere in here. So it is, it's fine. It's clearly was the laggard this week, so I wasn't super excited about that. The fact that being early as a trader is effectively being wrong, right? Even though I'm technically not down on this trade, if I were to have positioned just in the S&P 500 or the Qs, I would have been, certainly in a better, more profitable spot right now. But for that aside, still going to try and let this play out. Still has more to prove, but we'll see if this can actually start to move here throughout November. And last but not least, the Qs, you can see here again, putting in this bullish engulfing day. This is what I was mentioning here in the, initial down reaction for Apple. And let's see, what did Apple look like? I haven't looked at Apple all day. So you can see where they opened Apple was basically 3.5%, almost 4% down from where it closed on Thursday. And then you just saw essentially buyers come in and kind of grind it higher. If I take a look at Amazon, pretty much the same thing here, opened up down 4.25%, and buyers essentially kind of stepped up here and scooped it up, and it just kind of, closed near the session highs. So that was the reaction. Definitely saw that in the Qs here as we went out at all-time highs. So for the Qs, again, just ratcheting up these levels. That's what I kind of like to do as we grind higher. It's just kind of, play those levels to pay attention to. I like staying above the September highs, but obviously the lows from today's session equally, kind of important or an interesting zone to pay attention to. So that's it. That's the roundup there on the major markets. I think everything kind of speaks for itself in terms of price action. If we take a look at the dollar, because we did talk about that at the top of the video, you can see that it had a big move here on Friday, up 0.8%. So this was a big sharp move, and this was after it finally started to taper off. We had basically 12 days worth of down to sideways action here in the dollar. You could argue that that helped pave the way for this whole move in equities. And so now if, we think this inverse correlation comes back, if the dollar continues to go pretty strong here and it starts to break out again, you have to wonder if that's the excuse we're going to get to see the market kind of pull back a little bit and maybe cool off if the dollar gets going. So keep an eye on that. That's always an important currency to watch. Reserve currency of the world. If we take a look at the VIX here, you can see the VIX back down to 16 in change. It got as high as about 18. So again, you could see a lot of, at least a bit up from the lows even this week, 20% from low to high. So you can see that the market is quick to put on those hedges, and you can see it coming back down into the end of the week. And the TLT, I think, is also interesting. So look at the action here in TLT. We had this range. So we had this kind of false break, or this failed breakout, or even another way to look at it was sort of a lower high, right? So we had the high, lower high, broke down here, and we had some messy, sloppy action. We went sideways, but now we're starting to push back up. So we've got this interesting kind of bottom that might have formed here. We've got heavy volume that has come in, and you can see that we're trying to trek higher now in the TLT. So TLT is starting to, look more interesting, look more appealing again to the upside, so long as it can stay above, let's call it 146, 145 zone. So that one's interesting as well, and changing gears. Now let's finish off with some sector and industry analysis here. So let's take a look at what's moving, what's not. So if we take a look at the bullish names here that are moving. So we've got software application stocks. Let's go to a weekly chart. You can see heavy volume coming in here as it gets back towards highs. We saw internet content and information here, very heavy volume coming in, so definitely off of some earnings announcements. We see semiconductors, heavy volume, new highs as well. We see auto parts, very heavy volume coming in as it starts to lift up, definitely off of highs, but starting to move back up. We see technology, just XLK, the spider ETF here, getting on our list, and we also see SMH Semiconductors again getting back on our list. Now on the downside, things that didn't work out too well this week, financial credit services. So you can see this on heavy volume selling off and kind of breaking down a little bit. So not a really good look here for credit services. We see education and training services, which continues to be a very painful trade here from the highs in March. And we see tobacco selling off as well, heavier volume coming in and breaking to new multi-month lows. So those are some of the sectors, industries that were moving this week underneath the hood. So that's it. That's what I have for this week. As always, I want to thank everyone for tuning in as usual on these Friday videos. And if you like the videos, do subscribe to our YouTube channel or follow us at The Trade Risk. Leave a comment below. I always like to know what everyone else is looking at in terms of this market and what your thoughts are, what your homework or what you're paying attention to is this week. So that's it for me. Thanks as always. We'll see you back here next week, and have a good weekend.